So we see two models of how fintech players try to establish themselves. The one is to compete and disrupt. The other model is actually to collaborate and improve. For the disruptors, what typically is the path is actually to use technology that is misplacing existing markets, providing a better service, a better product, and taking market share from the incumbents. So we've seen this happen in payments, for example, many times over. We are playing more on the side where we actually are reinventing how business processes could be done more effectively, how a problem can be solved in a different way using risk analytics. And in those cases, the natural path tends to be actually through collaboration with the incumbents and actually helping the incumbents as much as the new players be better in terms of serving their customers. This is the million-dollar question for most young fintechs. How do I actually build scale? And from my perspective, there's really two strategies you can employ. One is you can pull in customers and expect that the customers actually find you at the time of their need for your service and your product. And this tends to work if you have a relative broad set of needs that you're serving, where the customer actually may use you every day or may at least use you frequently. In those cases, building a brand and creating awareness of who you are is actually a really viable strategy. We've seen players in the banking space who come into the banking space make this a successful strategy, or players who are coming into the payment space. There are other fintech companies that are not needed every day or potentially are even invisible to the customer. In those cases, you have to be at the point of need without the customer actually realizing that they're going to be using it. And we, as Funding Exchange, probably fall more into the second camp where the need doesn't arise very often. So being present, for example, if you're exporting, at the moment in time when you're making a commitment on an export contract to support that finance need that is likely to be tied into that contract, that's really where I see our strength in being present without actually somebody having to call for us. I think the benefit we're certainly seeing from the way we've built our team is that as a young company, we've had access to top talent. And so being part of a sector that people actually want to work in gives you an absolutely unique chance to build the most high-performing team possible. The compromise we weren't willing to make is we make hiring mistakes. And so we have a very, very clear culture that you need to contribute from day one. You need to perform. You need to help us move forward. We have embraced that 100%, and I think everyone in the team understands this. But it's a very black and white culture. If you're not performing up to the standards that everyone else in the team expects you to perform at, you're not going to be part of our culture. You can't be part of our team. And so it is, in a way, it feels almost a little bit, it's very exciting. People are very committed, but it's a little bit like investment banking used to be, in the sense of we measure performance every day and we give you every chance to perform. But if you're not performing, very sorry, you can't be part of this team. We're already seeing some of this. There is already a macro instability that is, particularly for important partners like banks, creating huge uncertainty. And what this does in our relationships and working with banks is actually pulling resources away from moving forward and building better solutions for customers and moving them back into the strategic space where banks are trying to figure out how to redraw the ring fence, how to outsource or bring certain parts of the business back into continental Europe, instead of moving forward and delivering value to customers. The second element of this question is actually as much around our customers. We work with small businesses and small businesses that want to invest in their future growth. Macro instability, and particularly the type of events we're potentially facing in 2017, be it the crumbling of the euro, be it macroeconomic uncertainty coming from the new leadership in the US, is certainly creating an environment where businesses may be less comfortable moving forward with growth plans, and this will have a direct impact on us.